Hi, everybody. It's June 5th. Scott Riley, the market update desk with Mortgage One, NMLS number 157524. The Tigers, they swept a series. Could they actually get on a little bit of a winning streak? It's been kind of very tough to watch them lately. We get the end of jobs week. Let's kind of go right into it. The ADP employment showed there were 122,000 jobs created last month, and that was slightly stronger than the street was expecting at 117,000. But there was a negative revision to the April report, bringing that figure down from 109 to 105. In all, the job growth was seen, most of the job growth was seen as small businesses and led the way. This has been probably the third or fourth month we've seen where small business was the bulwark. Now, while most of the jobs continued to come from education and health services, which added 57,000 jobs, by the way, the gains were more widespread than in previous reports. Wages for workers staying on the same job grew by an annual rate of 4.4%, which was unchanged from the previous report in April. Job switchers, those that moved from one company to another company, that's really where job poaching comes into play. They saw their annual increase go up from 6.5 to 6.6%. Bottom line, job growth has been somewhat healthy and slightly improving the last couple of months. But the majority of the jobs continue to come from education and healthcare services, which is a sector which is not economically sensitive and is more reflective of the aging population. So there is a little bit of concern that it's not as widespread as what it really needs to be. So the trends for the ADP report, the 3-month average is 96,000 jobs a month, 6-month average is 67,000, and the 12-month average is 59,000 per month. So we are seeing an uptick in those averages. So we're still waiting to see if that's going to continue to move forward. Now, today we got the all important but sometimes never correct BLS non-farms payroll. Now, that showed a better than expected seasonally adjusted 172,000 jobs. Now, that's down slightly from what was an upwardly revised 179,000 in April, but better than the consensus of 80,000 that was expected for May. The unemployment rate did hold steady. That's the U3 unemployment at 4.3%, and that was expected. Leisure and hospitality led all sectors with 70,000 jobs, well above the 14,000 per month pace that we've been seeing over last year. Local government, very interesting. That added 55,000 jobs. Very curious there. Healthcare, which has been the leading sector, contributed 35,000 new hires, about in line with what the average that it's been having the last multiple months. Social services, social assistance and services added 12,000 jobs. Average hourly earnings rose 0.3 for the month and now is up 3.4% year over year. Both of those were in line with what the market was expecting. In addition to the strong May report, we saw revisions for the prior month different than what we would normally see. We normally see negative, but we saw an increase or a better to that number. So in March, we saw an upwardly revision of 64,000. I'm sorry, April. And March got an upward revision of 29,000. So that came in, the totality of March came in at 214,000. So that made those much stronger than what they initially came out as. The household survey, what we just went over was the headline survey. The household survey, which is calculated to use the employment rate, also reflected a solid labor market. That showed an increase of jobs by 149,000. Labor force participation it did hold steady at 61.8%, while the broader measure of unemployment, that's the U6 or all in unemployment, actually ticked down slightly to 8.1%, which is still a very large number. So what we saw on Wednesday, we saw the Dow jump almost 900 points. We saw a slight pullback yesterday. What that means right now is the Dow is at 51,696 as I'm looking at the ticker. That has been a huge movement over the last 60 days. Just a very, very large movement. So all of this jobs data, which was better than expected, did not do us any favor in mortgages. We're seeing the 10-year Treasury yield increase by 6 basis points to 4.536. We had gotten down to about 4.4 early in the week. Now, oil is hovering just a tick above 91. That's for Brent crude, and WTI light crude oil is about 93 a barrel. So we've seen that move down. Now, what we have to wait to see play out specifically for Middle Eastern geopolitics, is there a ceasefire? Is there a truce? Is there peace? Will the Strait of Hormuz open up from the blockade from the United States and the the blockade from Iran releasing boats out? So lots to play out. Now, while this is good for the overall economy with jobs, it does not do us any favor with mortgage rates. So we're staying on top of everything. We've got some activity going on this weekend. We've got, looks like 2 buyers putting in offers. We're on call all weekend as normal. Give us a call. We'll help you get pre-approved. Go through loan programs. Make sure you're in the best position possible. Also go through the multiple different mortgage insurance options if that's applicable. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Hey, we're actually getting rain today. We do need it. Have a great afternoon.